Good evening. This is the Elliott wave update for the S&P 500 for Sunday, February the 13th, 2022. Friday's trade did continue to show some stronger volatility to the downside. And in fact, that basically just continued or kicked in pretty much within the opening hour of trade here in the US after the S&P did reach a high at 4,520, and the market just then sailed lower and continued lower for the balance of the session, in fact, ending on the lows of the day. What I'd like to just now start with is a review of where we are, what we've covered thus far, and what the expectations would be for the size and the depth of the wave pattern that we're now beginning to unfold within. So let me start out here on the 4-hour chart. This is the all-time high, 48.08, and that is where I've marked completion for minor 5, intermediate 5, primary 5, and cycle 5. So we're just within this first portion of an intermediate degree, either ABC down or 5 waves down to form a primary A wave. So within that, I have started counting by saying that this is intermediate wave 1, intermediate wave 2, which would put us in an intermediate third wave down. Now, if this then ends up being an intermediate A wave and an intermediate B wave with an intermediate C wave down, it carries the same characteristics and personalities of that third wave. So my expectations, no matter what that end labeling may show us, the way down to that level is still going to be as severe, as strong, as in depth, how far it will go. And so what I'd be looking for is for the third wave or the C wave to be in relationship with this first wave down. Now, being that if it's a third wave, and again, even if it's a C wave, this low at 42.12, 42.13 will be broken on the way down. It will be broken. And so the minimal amount that I would be looking for out of the S&P would be a drop down to where this wave is going to equal this wave. And that comes in at 3,990. Now, for inside of it, if I'm believing that we're in a third wave, then a minor third wave, then I'm looking at least that this market needs to start getting itself down to 43.50, and in actuality needs to really start breaking down closer to these levels, 42.17, down below that 42.12. down towards 41.17, and actuality down towards 39.90. That would be the area I would expect the third wave to come down. That's quite a bit of distance that we need to come in. And it doesn't necessarily have to all come at one, but I would suspect that even within this initial wave down, now I'm going to drop back down to the hourly chart so we can try to see inside of this move. This has been strong, but you just saw in relationship when I move it out and show it even on, if I don't expand the hourly chart, it's not that big. It's not enough. So it really tends to make me believe that if this is minor 1 and minor 2, this is subdividing into minute waves. And so there's a possibility that because of the size that I'm looking for to the downside, that maybe the whole factor is minute 1, minute 2, minute 3, 4, 5 to complete the first minor wave 1 down. And if that's the case, we've got some serious downside yet to do. So just going back to just dealing with what we have now done thus far, it really does appear that here would be the first and the second wave, And then we start to subdivide in the third. The third is the longest and the strongest, and it certainly has begun to unfold exactly in that nature. So if I had to count 1, 2, 3, 4. So we're in the fifth. And so this was like we 1, 2, this is the third. This is just a small fourth wave. And we're just bouncing around, not breaking below that low at 43.93, which was created on Friday, and not really breaking above the hourly 8, which is at 44.32. We're kind of sitting in between and just putting in an ABC. Now that ABC should come and take out that high at 44.24. I would imagine that it can. If the market starts to break up higher, I really don't think it should be coming back up towards 44.50. We have the 8 at 44.33-ish, and then we have the 20 at 44.58. And that, I believe, should contain a bounce from these levels in this particular count. And then we would begin to drop down again. And we've already seen, even within the Globex, the first couple of hours here in Globex, the volatility remains where the slides lower are pretty quick and they buy it right back, which is pretty quick. I do suspect that that will remain the case, even as the next sequence starts to begin, when the Asian markets come online in a few minutes, and then the European markets come online in the middle of our night. So I would suspect that the volatility will continue. Now, again, upside should be limited. And then we start to break down. I would be looking for a break below that, the low we made on Friday at 43.93, a break below 43.83. And for the market, even just to complete this particular section of the third wave should come in somewhere around 43.50. Then we get an additional rally in terms of a possibly a minor fourth wave or just an internal fourth wave. So if I'm going to count this as minute 1, minute 2 of 3, and this is minute 3 of 3, and that comes down to here, a minute fourth wave, and then a fifth wave, we still have considerable downside to be put in before we would finish the minor third wave, and then work through a minor fourth wave, and then come down again. Because don't forget, I know this is really pulling this chart open, but here's what I am suspecting, that this larger degree wave on the intermediate degree needs to come as a minimum down to 39.90. So again, we have quite a bit left to do, and the market's now working its way through a small bounce after our very volatile Friday. And then I think the volatility kicks in again to the downside and we start heading down lower. Now support, again, 43.83, 43.58, 43.49, 43.36, 42.93, down to 42.88. That's as far as I'll go. But when I open the chart up, you can see we continue to have support all the way down. These inside numbers, these are for this minor third. This would be for the larger degree, intermediate degree. And so you can see 382, 50, 618. 618 is, if it's third wave, should not stop it. And it may cause a pause, but we're looking for these larger moves now. And in essence, let me just take it back out to that 4-hour chart. To show you the damage that can be done to the market, we just start looking. There's the 100%. Where's 1.618? 36.22. And this is taking it out another level to where you're getting minimal drops to like 3,800 minimal. That's 382 of the much larger move. Remember, we're coming off in an intermediate degree. We got a primary degree A wave, which looks like it likely is going to start to find its support around 3,800. We can finish the first 5 waves down on an intermediate degree. That just forms the first wave down, or A wave of a primary degree. And then we're looking at these next levels down. So this correction is a long-term correction, and it's going to come in several levels. That doesn't mean it's going to be straight down, but we're now entering into sections of the correction where we should begin to see increased volatility above and beyond what we've already seen on Friday. That I'm going to tell you, in my opinion, would be mild to the additional volatility that I expect to kick in and really start to break this market below 4,000. So again, we have geopolitical issues going on right now around the globe, particularly right there, Russia versus the West and the Ukraine. We have interest rates, not sure exactly, is it going to be a 50 basis points? Is it going to be a full point? Is it going to be whatever? Are they going to have an emergency meeting? Or are they going to wait until March? So do we got to play this bounce around volatility game until March? Then we get more evidence or more directional evidence. A lot's going on. So my take is to play it price action wise, play the upside, play the downside. So we're looking for a continued downside move. And my thought process tells me that within that fifth wave, the sizable decline, the sizable pushes of volatility down will come to the downside. So again, upside, we have resistance at 44.17 up to 25. Then we have 44.29. Then we have 39, we have 45, and then we have the 20 at 44.55, 54. And that I really would not expect to be taken out. And then I'm looking for that continue to the downside. So continue to trade smart, trade according to the moving averages, use the Elliott, use the moving averages, and use the Fibonacci. Our next update will be the 14th.